Hey everybody, Boris Schlossberg from BK Forex. Welcome to our daily Forex technicals for 4-3-13. Euro starting to get coiled like a spring. As always, past performance not indicative of future results. Trading Forex carries high low risk may not be suitable for investors. High degree of leverage can work against you as well as for you. Before deciding to trade any such leverage product, you should carefully consider investment objectives, the level of fears and risk appetite. Possibility exists that you can sustain a loss on your initial investment, and therefore you should not invest money you cannot afford to lose. You should be aware of all the risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. The information, including commentary and trade ideas provided by bkforex.com, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. BK Forex LLC and bkforex.com are merely providing this information to be general information. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain advice based upon their unique situation before making an investment decision. They should tailor the trade size and leverage of their trading account to their personal risk appetite. BK4 LLC is not responsible for any loss incurred or investment made by readers or clients as a result of this information, and we do not render investment, legal, tax, or other professional advice. And if such advice is needed, seek advice from a competent professional. Well, let's take a look at the night. Very, very quiet night in the market so far. Obviously, Asia just sort of marking time. Euro, though, is really trading in this very, very tight. Basically, if you look at it, 28.50, 27.50 range. We popped up a little bit above it yesterday, just could not hold it. The critical levels, I think, at this point, obviously 2750 is key support here to the bottom, and that seems to be relatively sound for the time being. We tested it once, tested it twice, tested it three times, and we seem to be consolidating around the 28. We start to give up 28 and start to really move towards the 2750s. That'll be an interesting test for those that are trading support resistance. That'll be a very, very key tell of whether we can hold it again. To the upside, we really need to break the 28.85 level. That puts us right back on path towards 29, and on a longer term basis puts us towards the covering of this gap, which still remains wildly open, barely open really, as a trade. What's interesting though is if you look at the longer time frame, you see it. We had the gap, we had the break lower. We basically on a very micro level starting to build higher lows. As long as these higher lows hold, that puts a more positive structure on the euro and gives us an opportunity to think that there's a potential rally, at least towards the 30s, 50s, towards the gap in the making in the near term. On the other hand, a break here, we've sort of held this 28 level in Asia, tested the lows, took the stops out. If we get a sharp break to the downside, this becomes a much more serious level. If this this again gets tested and then furthermore broken, then we start on our path towards the 2650 level. And it suggests that this range consolidation was simply just that, consolidation for a break lower. So one way or the other, euro seems to be primed for a move. Perhaps it's going to be tomorrow when we have the ECB meeting, perhaps Friday, but we'll be watching this very carefully. Remember, lower volatility lends itself to higher volatility, so this is just the calm before the storm in many ways. Dollar yen, same kind of idea. Yesterday I pointed this out to some of you guys in BK that the 92.50 level was a value proposition. And obviously we tested it and then quickly bought it, and that provided upside movement for the yen. But the upside movement is very tepid. You basically have 94 capping, and this seems to be the new cap level. Before it was a 95 cap level, here it's a 94 cap level. And that is actually, I think, from a longer term perspective, an interesting point. The key thing here is, are we just drifting, making lower highs, and constantly trying to move ourselves to the downside? Tomorrow, I think, is going to be a very key tell. This value proposition, this 92.50, if we revisit and actually break it, it opens a full range of possibility for us to go all the way to 91, because that 91 was the key test support level from the end of February when we had a big distribution in the yen. And that would actually obviously assume that the market is very disappointed with any new policy proposals from Kuroda. In order for this thing to really pick up and regain momentum, we need to take out 94s, 94.50s, and ultimately you really want to see 95s retaken as a resumption of trend. For now, there's a mild bias to the upside in the sense that this was a value zone that the market bounced off of, but this remains a cap, and we'll have to see how well it's trading throughout through the day. Part of the interesting thing I think that's going to happen is, one of the reasons why you're seeing the distribution in the yen is that the dollar component of the pair, which was very strong, where the U.S. data was surprising to the upside, is now becoming weak. The U.S. data is starting to surprise to the downside. So you only have the fuel from the weaker yen component, not from the stronger dollar component. Today we have, I think, ADP, we have a couple of data points on the US. If that does resume to the upside, if we have a positive dollar story to tell, that could give it a little more credence and push us higher. But in the meantime, watching the price action, 94 for the day today becomes the key level. A break of that does give us, relieves this near-term downside pressure. We start drifting back to 93s. It's going to be a very interesting night when we try to see how 92.50 tests. A big disappointment out of BOJ. This 92.50 will go like a matchstick and snap in two, and then we will be looking at 91 as a possible target to the downside. Cable had a massive break yesterday. That was a very, very interesting trade. But Cable basically just failed miserably twice at this 52.50 level. And not only did it fail, we just had a big turn away from it because of negative news. So now we're looking at a double top at 52.50. This now becomes 50.50 right now. Is the near-term support level, and we get further negative news, we may be able to see if it supports at this level. That is a relatively sound support. It bounced off of it twice before, so this could be the bottom of the range. Those that are like contrarians, like to buy a value, may be willing to buy the 50.50, and obviously 150.100 is the psychological support that comes after that. We may be on the way to rebuilding here, sort of a second wave to the upside, but the next move is going to be very key. If we fail ahead of the 52s, what we will have established basically is lower highs and a further distribution, just a big distribution top of the cable. Bias in the cable remains negative, but a break of the 50.50 level is really going to be the key negative move here for the time being. Tough to trade it right here unless you just simply want to be a buyer in front of support and hope for a quick turn for a day. Aussie, also having a very quiet day. Not much to say about the Aussie. The impressive thing about the Aussie is we held 104s. We're sort of holding 104.50s. The critical thing here is the break of the 105s. We take out the 105s. That is very important. We take out the 105s. There's no resistance all the way up to 106s, and that puts a much more firmer bid tone in the pair. But if we're just kind of shuffling along here, notice that what this is developing right now, if we don't get any further upside action, is a set of lower highs, and then a press down to the 104s could be more significant because a break here with the 104s puts us right back towards the 103.50 support level. Aussie sort of very indeterminate right now. It looks like to be a buy above 105, and really nothing until you drift all the way to the 104s because it's just sort of very low volatility environment. The other, I think, interesting pair that we had a move on was the Kiwi. The Kiwi continues to be performing better, I think, in many ways, even than the Aussie. There's 84.50 caps, but if we get a positive move in all the risk currencies, if we get a good move in the calm dollars, Kiwi should be leading the way, and this 84.50 could go higher. This is a probably stronger breakout story than the Aussie story in the most immediate sense. And a break of 84.50, if we take this, go in the dailies, you can see that this really opens up the path right here, all the way up to 85. It really clears the 85 path. So the structure in the Kiwi looks better than the Aussie. And if you're trading calm dollars to the upside, this may be the trade today if we can get 84.50s to be taken out as a momentum move towards the 85s. This is Boris Schlossberg wishing you guys the best of luck, the best of trading. As the week shapes up, more event risk and clearly going to be more volatility on the books. So these small ranges are going to disappear. You're going to be watching them very carefully. Over and out.